Hi, this is Zak Mir with the weekend edition of the Bulletin Board Heroes here at Zak's Traders Cafe. It is Sunday, the 23rd of April, St. George's Day, and we're starting off with the FTSE 100, where we broke the resistance line there from back in February around the 78.20 level currently. Above that, we were looking for a retest of, I think, the intraday high around 80.14 was the best we made, in fact, 80.47 in fact. And above that, looking for the top of the rising trend channel from the autumn as high as 82.50 as soon as the end of next month. Rising 50 and 200-day lines, we've got the RSI at 65, which is near to overbought, but not quite so a bit of gas in the tank for further gains. On the downside, things do go pear-shaped then, 78.20 at the February line, and then worst case at the moment, 77.70 at the 50-day line are the downside that we'd expect. If you're looking for a trigger on the upside, an end-of-day close through 79.30 should be enough. I think the high on Friday, 79.36. Moving on to the DAX, which has been rather better than the FTSE in the sense that we've cleared February-March resistance here, so this market is the equivalent of 8100 if it was the FTSE. The target here up to the top of that rising trend channel from September at 16,500. Looking for that by the end of next month, especially while we hold above the February-March resistance at 15,700. So actually a reasonable risk reward there for the DAX bulls, and that trend channel pointing the way. With the 50 and 200-day lines rising and the RSI still only at 62, we have a scope for further rises here. On to the Dow, where surprise, surprise, we haven't been able to get through that one-year resistance line, 34,100. But we're still trying above the initial April resistance at 33,600. We are in the box seat for a break for 34,100 and a push to the top of that rising trend channel from September as high as 36,500 as soon as 4 to 6 weeks after any break of that 34,100 line. On to the Bitcoin situation. We've had to test the 50-day moving average, well, the 50-day moving average area as support. We haven't actually touched it yet, which is plus. The old lows there, end of March, 26,700. That's almost exactly where the 50-day line is now. While we're above that, we're still feeling quite confident that we can head up towards the June resistance line projection at 32,000 over the next couple of weeks, perhaps even as soon as the middle of next month. Ideally, the longest it takes to get to 32,000 is the end of next month. On the downside, below the 50-day line, then there's a risk of a test of 25,000, but not expecting too much more than that on the downside, even though the RSI now has pushed below the neutral 50 level. We're at 44, so slightly vulnerable to a pullback, at least to the 50-day line. On to the stocks, and starting off with Ananda Developments, which has done us proud in terms of the rebound that we had from March, and also the progression, which has been relatively smooth. We've got both the 50 and 200-day lines rising now, so they're going into a golden cross, probably 2 or 3 weeks away. The run up to a golden cross, normally the strongest part in the cycle. Also worth noting is the way that the rebound, or the retracement that we had, rather, down to 0.6, so it was almost exactly on the initial target we had, around 0.6, the top of September broadening triangle, and the next target here up towards the 1 penny area, hopefully as soon as the end of next month. That is a March resistance line projection from last year. While we're above 0.6, looking for 1 pence there over the next few weeks. On to Asiamet, which I haven't covered for quite some time. I suppose you can tell by the chart maybe why I haven't, but we've got a rising trend channel here. That's been in place since July. We've cleared the 50-day moving average at 1.25 pence at the end of last week, as well as the 200-day line around 1.2, but above the 50-day line, we're looking for 1.8 pence at the top of that July trend channel, and hopefully we could see that by the end of next month. And I suppose given the performance, that could not happen a day too soon, given the bearishness that we've had. On to a stock which I suppose surprised me, actually, in terms of the rebound that it's had. Here is looking as though it might be a rather slow progression, but in fact, the break of that neckline resistance there at 21 pence from the beginning of the month set off the push through the 50-day moving average 23 above the 50-day line, and that broken January resistance line projection. We're looking at 45 pence as soon as the end of next month. So yes, that confident about a big move. There's been a breakback below the, breakback above the January support there from the beginning of the year at 22 pence, as well as the break above the 50-day moving average. So feeling pretty confident that we can head up to 45 pence, almost filling that gap from the January time by the end of next month. But as while we're above 21 pence, feeling pretty confident there. On to Blencowe, which has been causing frustration, I suppose, to most in terms of its price action, rallying and then falling back quite quickly. But I think this time may be different. Punchy call, obviously, but this time could be different in the sense that we've had a bear trap from below the January support. That was around 4 pence, so that was for the end of March, beginning of April. And then we've gapped through the rising 50-day moving average, which is very impressive, and we've held above that, found great support on Friday at the end of the week, opening at the low, closing at the high, and closing above the 50-day moving average. So that looks like a bull flag, a decent bull flag situation, and that should be enough to take us up towards 7.5 pence as soon as the end of next month. So a punchy call there, but with that formation that we have, the unfilled gap to the upside, feeling pretty confident, especially as that actually completes an island reversal, a bear trap island reversal. We had a gap down back in March. So everything at the moment going for Blencowe, even though maybe non-chartists might not appreciate it. On to CapEx, and here we've got a situation where the shares have delivered a decent recovery over the recent past within a triangle, unfilled gap to the upside to start the week through the 50-day moving average, and the view now is that above 2.25 we're looking for 4 pence as soon as the end of next month. That also completes an island reversal, so we had the gap down there in February and then the gap higher for April. So let's see if CapEx can deliver the goods while it's above the 50-day moving average. The other point to note, obviously, is that bullish divergence line, which has really given extra momentum to that situation. Speaking of momentum, very good to see that Chill Brands has stepped up to the plate in terms of recovery, and especially in terms of proving the doubters wrong, because they were really throwing rather idiotic stones at the company. Here we've got a rising November trend channel, top of that channel heading for 7 pence as soon as the end of next month, and that's valid especially while we hold above the old February resistance around 4.4 pence, so above 4.5 pence. Really looking for 7 pence there on Chill Brands, and well done for all concerned in keeping the dream alive on that particular situation. Moving on to another stock which looks like it may be turning around, hopefully for good. Goldstone Resources, here a triangle reversal. I think I've already spotted it before, but maybe at the beginning of the month. But here we've had an October trendline break, broken above the 50-day moving average at the beginning of the month, and then the plus point now is the way that 50-day line is now rising. And we've had a decent push through the neutral RSI 50 level as well. So above the 50-day line, 2.75, looking for as high as 8 pence over the next 1 to 2 months, maybe by the end of June would be the correct time frame there. The other point to note is that as well as the bullish divergence to start the year, we've actually had an extra bullish divergence from January to April with the lower lows but higher RSI trace on a very oversold RSI. Moving on to eEnergy, which has turned itself around very well, actually. The start of the rally here, really the break of that January resistance line there, back around the 3 pence level at the end of last month. We also had bullish divergence going in there, so it was a bear trap reversal, bullish divergence, and a V-shaped bull flag breakout. Everything that we like, really. Above 5.4 pence, which was the old initial April peak. We're looking for not only that resistance line there from August as high as 6.5 pence, but actually up to 10 pence, perhaps as soon as the end of next month. So that's how confident we are with this current V-shaped bull flag and the whole setup there, closing the week above the 200-day moving average as well for the first time in a very long time, actually the first time in nearly 2 years. So well done to the bulls there. Moving on to stock which is also bubbling up quite nicely at the moment, Invinity. Here you can see that we gapped through the 50 and 200-day moving averages earlier this month. One of our favourite signals. Initial target here up to 50 pence. Eventual target here, maybe by the end of next month, as high as 65 pence, especially while we hold above the 40 pence area. So that would be that was basic resistance on the way down. So that would be very nice indeed, backed by that as yet unfilled gap to the upside. Moving on to the last few. First one is Pennpetro, where things seem to be hotting up quite nicely. I think this is the second day this week or last week that the shares were up. Got a bullish divergence there. Just got a bit of neckline resistance around 3.5 pence, but above that, looking for the shares to fill the gap up to 5 pence and maybe even hit as high as 6 pence by the end of next month within that broadening triangle from the end of January. But the key here should be the break of 3.5 pence, leading to a reasonably strong push higher, backed by that bullish divergence. Much lower prices in April, but RSI higher there on that one. Stock which I'm pleased to see has turned itself around very well, especially on Friday, with Synergia broken above neutral 50, broken above the 50-day moving average, which is rising, which is a great sign normally. A bit of a handbrake turn in terms of the Thursday-Friday price action, which is also something to which it would have caught the bears out. Above 0.11, looking for the shares to hit as high as 0.21 by the end of next month. On to another stock which has had a decent week, UKOG, UK Oil and Gas, and here very pleased with this one in the sense that it's actually had one of the best technical signals you can have, the unfilled gap to the upside off the lows. We had a failed one there back in March, but it didn't actually go too much lower after that. But this one has held, and the shares have really jumped on off the back of that. Above 0.09, looking for 0.12, which is that old January resistance line projection, and after that probably looking for much more. Let's say something along the lines of wherever that line is reaching, which should be up towards the 0.13 or 0.14 area. So lots of potential upside there to come while we're above 0.09 on UK Oil and Gas. Just a couple of stocks to go now. First one is Xtract Resources, which almost on the quiet has delivered the goods. We were looking for the shares to head towards 2.5 pence. They're nearly there, well, they were nearly there last week. We've got a rising 50-day line, which should help the cause, and while we're above the February resistance on the way down, above or at 2.2 pence, looking for as high as 3 pence by the end of next month, which is the top of that triangle from the end of November. Finishing off with Zanaga, which has really delivered for the bulls. It really did that on Friday, and actually hit our target there that we had at 10 pence before settling down, which obviously prompts us now to look for a new target here. That could be as high as the line I'm about to draw, which hopefully will come out in a second. Here we're looking at a line towards the 12 pence area by the end of next month, which I think is a conservative target there. Upside value while we hold above recent support around 7.25, so above 7.25, looking for as high as 12 by the end of next month. That's it from me today. More updates during the week.